Well, hopefully that worked because you just got a little error message right before we got started, but it's all good. I think we are up and running. If not, let me know in the chat. Well, you won't be able to because you're not there, but it's all good. It is live stream Saturday. I'm very excited to be on. I wasn't able to join you guys last week because we were taking a little family vacay to Asheville, North Carolina, which is one of our favorite places to visit, y'all. And I'll share that with you as we kind of get today rolling here. But love to know where you guys are watching from. As always, feel free to hit in that comments and please let me know it's working because I got an error message right before we were supposed to go live. Let me know that you are seeing this. It looks like we have people on, but I just wanted to double check. So give me a thumbs up or yep, we're here with you, whatever it is in the comments. That way I know we're ready to rock. But yeah, I'm excited today, and there's a lot of news going on with real estate over the last few weeks. We've got kids going to school here in the South. I know, most northern cities aren't quite there yet, but our kids started this week here in Florida. They went back on Wednesday, so kids are in school, back to the grind for those guys. And the housing market is definitely a hot topic recently, both, obviously within the real estate community, but, just the people I'm rubbing shoulders with on a daily basis, both at our church, out in public. People are asking the question, what is going on in the real estate market? And we're going to talk about that today. Obviously, if this is your first time on the channel, that's what we talk about here. We talk about all things Tampa Bay, but today I wanted to talk specifically in regards to an article that came out this week in regards to the potential damage that the Federal Reserve has done to the housing market. And it may last years is what they say here. Know the address. You know the address. Oh, there you go. What's up? How are you, buddy? One of my clients back home in Detroit. Super excited to see you. Hey, man, thanks for chiming in. I appreciate it. It's absolutely great to see your face. And yeah, hey, there's a lot going on, right? There's a lot of uncertainty. People are anxious, they want to know what's going on in the marketplace. So our goal with this channel is to not only do that here in Tampa, Florida, but nationally as well. So, if this is your first time, hey, if you get any value from this, please let people know, click that like button, hit the subscribe button as well. But what I wanted to do is get into that article. We're going to talk about a few things happen locally as well that I think are points of interest for anyone who's considering buying, selling, relocating, or investing in the Tampa Bay area. But we're going to make this much more broad today in the overall economic landscape, so to speak. But yeah, Saturday I wasn't able to join you last week because we were on a family trip to Asheville, North Carolina, which is, I think, one of those places that you should consider visiting at one point in your life because it's a mountain town up in the Appalachian Mountains, and you got the University of Asheville out there. It's a college town, but man, it is a cool place to go check out. I discovered Asheville about 7 years ago when I was working in the beer business, and got an opportunity to go to Asheville, North Carolina, as Sierra Nevada was working on building their new brewery out there. And listen, if beer's not your thing, that's okay. But they've got literally, I think, the most visited restaurant in all of North Carolina, which is pretty incredible. And for good reason. It is a wonderful dining experience. I would strongly encourage anyone to go. They got great chefs on staff there. And trust me, you will fulfill your culinary dreams by going there and just having lunch or dinner. And the facility is gorgeous, right? They carved it out of the side of the mountain. The road up is awesome. And they've got this huge patio and an amphitheater out back too. And just, there's plenty of places, there's things to do. It's pet friendly, it's kid friendly. I would encourage you guys to go visit at least one time in your life. And the city of Asheville is one of those places. It's a college town, but it's alive, right? We actually went to a restaurant called the Lobster Trap, which I would strongly encourage you to go visit as well. And the kids, now this might be a little graphic if you're a vegan, shout out. But the kids got to pick their own lobster, and the chef was cool enough to like pick it up and ask them if they wanted to touch it, right? So they literally got to pet their dinner. So it's one of those experiences. I know some people would not be okay with that, but our kids were like, yeah, that's fine, no big deal. But we had, little neck clams and lobster mac and cheese and surf and turf and scallops. Dude, it was just so good. It was such a wonderful experience. So again, I would encourage anyone to visit Asheville. The beer culture is great. The food culture is great. If you've never visited the Biltmore Estate, you are missing out. You can go in the winter and go check out the the light show they have there for the holidays as well. And it's just absolutely phenomenal. So that's where we were last Saturday. We were hunkered down in a little mountain Airbnb and just eating our way through the city, which we tend to do as a family. Shout out to anyone who experiences their vacations that way. Our family's very experiential. I'm not necessarily the most material focused person, good or bad. I don't look at people as negative if they want things. There's nothing wrong with that. But like we've always tried to invest in experiences with our family. That's why we love to travel, and we are foodies at heart. I'm a fat kid at heart, in case you hadn't noticed. And it's a great place to go eat. If you guys have been to Asheville, North Carolina, I would love to see your recommendations of places to eat. The place we always go, no matter what, usually when we drive home to Detroit, which we do 4 to 5 times a year, we go to Biscuit Head, which is a breakfast spot. There's 3 or 4 locations in Asheville, and y'all, they make these cat head biscuits. That's what they're referred to in the South as a cat head biscuit. And the reason they call it a cat head's biscuit is because it's as large as a cat's head, and they are huge. And they put all kinds of stuff on there. There's a spicy chicken one, a pulled pork one. Of course, they got a vegan option as well. And it's like a foodie's paradise. They have a butter and jam bar where you get to pick these different types of butters and jams to put on these biscuits. Y'all, it's so good. We have to go every time. So I share that with you because I would strongly suggest that you make it there as well. We had shrimp and grits at another place that I cannot remember off the top of my head, but I will put that information down below too. So sorry, I'm going tangent on our personal vacation to Asheville, but like, I just always love to share my experiences with anyone, just like we share our experience here in Tampa with everybody. We definitely want to make sure we share our experiences with everyone else about where we go. And the reason I wanted to start out talking about this is like, number one, I wasn't with you guys last Saturday, but number two is, in North Carolina, there are a lot of people who start in the north. And let me walk you through this. Floridians call people who move to North Carolina halfbacks. And the first time I heard the term, I was like, what's a halfback, right? And my father-in-law was telling me, he goes, oh, that's what we call people who move from the north down to Florida, and then they move halfway back, which is North Carolina. And I thought that was great. And it's true, it's true. Like what happens is people from the north will move down, and for whatever reason, this wasn't their thing. It's either too hot or the culture doesn't fit or whatever it is. And then they move halfway back up. And then you meet all of these transplants who have lived in both, New York or Chicago or Detroit. And then they moved to Florida, and now they live in North Carolina. So I find it fascinating because when we're there, we'll typically run into somebody like, oh, you guys are from, the Indian Rocks Beach area or Tampa area. They're like, oh yeah, we lived down there for a while. Now we move here. So like, and I get it, right? Like if you're going from someplace that is all, sunshine and beaches all the time, and you're looking for something different, the mountains definitely give you that option. So it's a really good place to visit. Also, one of the really cool things is in the Clearwater St. Petersburg airport, which is technically located in Clearwater, by the way. It's right on the border there. Now that airport flies directly into Asheville through Allegiant, and it's pretty inexpensive. The last time I looked, we could fly round trip for $80. $80 round trip. That's nuts. The thing is that they require specific days on those flights. So you guys got to kind of keep that in mind. But yeah, I thought it was pretty interesting and worth to share with you guys. Our trip to Asheville, North Carolina, which we really enjoy every single time we go. But also we really want to get into some of these numbers here today. And I'm not one for reading to people, but what I recognize is on these live streams, a lot of the times you guys aren't going to get to go through this information the way I have. So I'm going to read this article that came out in Bloomberg this week, which I think you guys are going to find fascinating, talking about the overall health of the housing market and how it's possible. This isn't Juan saying this is what happened, but I think this is a great article to kind of help us with some perspective on, the current state of the real estate market and what challenges we could face because of the actions that were taken. And in most areas, we would refer to that as distortion, right? When you take action on something, it's going to have an effect somewhere else. And then that's really what's going on here. So love it, guys. We're going to break into this today. And hey, if you're watching this on YouTube, please let me know that this is working. I've got comments from everywhere else, but I don't have comments from YouTube yet, letting me know that the stream is kicking it up. But I'm going to get into this article because I think you guys will get some value from this thing for sure. So bear with me. Where are we at? All right, y'all. So here's the article I'm referring to here, which I think is pretty valuable. And I'll put this in the description for those of you who are watching this on the channels later. We have a YouTube channel. It's called Living in Tampa, Florida. I put the description in there, and I always put my resource notes from the episode. That way you guys can always go check, because a lot of the times the things that I share, if it's not just a blog article, a lot of the data I share for real estate is dynamic. And I try to use sources that do that for you, so you can see where things are shifting. And anytime you click on this, whether you're watching this today or 6 months from now or 6 years from now, you'll be able to look at what's happening in your market today. So I think it's pretty valuable. But this is a great article on, this temperature of what's happening in the marketplace right now. I think it's super important. And I think it's extremely valuable to kind of check out here. So the Fed, and I'm going to start with the title, right? So the Fed's damage to the housing market may last years. It's a pretty, and when it comes to news, it's always, if it bleeds, it leads, right? Which, good or bad, that's just the reality of it, right? It's good or bad, it's just the reality of it. So I love popping in with that stuff. Andrea Bowen. Andrea's another one of my clients. Farmington Hills, incredible couple, her and her husband. Am I still enjoying in Florida? Yes, absolutely. We love it here. But we love our home back in Detroit as well. And some of you are watching this, and you know me, and my team in Michigan there. And we still have, I have a partner back home in Detroit, and we have 3 agents that sell for us up there as well. So we're still very active in that market. But my home now is Tampa, Florida, and I'm leading our team down here directly. So just wanted to share that. But Andrew was a great client. So much fun to help serve those. How's the Mustang, by the way? Or do you still have that car? That's what I want to know. All right. So I want to get into this article here in regards to what it is. So the central bank created major distortions in the market where many Americans have most of their wealth. Why? That's the big question. That's what they want to know, right? And I think this article does a really good job of getting some perspective. And I know a lot of the times I didn't know a lot of this stuff until I really started to study my craft. And that's okay, right? Like, we lean on people who have expertise in specific areas, so we don't have to be the know-it-alls, right? Or know every single thing, right? Like my client Baha's on this, and he's an engineer by trade, and thank goodness that those guys know what they do so they can make things work, because my brain doesn't think that way, right? But in terms of real estate, I love this stuff. And for me, I've really started to become passionate about understanding why markets work the way they do. And the reason that I'm so passionate about that is because I think, just like most human beings, you probably want to know where things are going too, right? We're all looking for certainty, and just an understanding of where things are going, right? Like, we know we don't have a crystal ball, but it feels really good to have at least some insights on where we think things are going. And I always go back to the quote from Wayne Gretzky, where he said, the reason why I was better than everybody else, and I'm paraphrasing, he didn't say it exactly this way, but the premise behind this was like, I skate to where the puck is going, not to where the puck is. And that was the difference between being great and just being a good player. And I think in real estate, if we can have a better understanding of where things are headed, due to environments or outside forces, then we're going to have a better chance at making a quality decision, as opposed to just guessing. And that's why I'm so passionate about this stuff. And I love it, right? It's a way for me to help my clients. I've got a lot of investing clients now, or a lot of investor clients, and we're investing in real estate. So I share back with you. I do this because I'm sharing my insights. Like, these are my personal notes I'm digging through, and then I come back and share it with the audience. And I love doing that. And thank you for giving me an opportunity to do that. Andrea says, I traded it in for a Mach E just before oil prices spike. Good play. I like that. That's good. That's awesome. Congrats on the Mach E is there. All right. So let's dig a little bit deeper here. All right. So with interest rates now hovering around 5%, existing home sales are down more than 14% in the last year. Okay. So let's stop right there. Existing home sales. Now, you're reading all these headlines right now where people are saying, hey, prices are down. And first of all, that's not true. And I'm going to show you the data behind that, right? what is down is existing home sales. That is 100% true. And we're going to see that data here as well. But I want to kind of pre-frame it because I think a lot of the times people will mix and match those words. Hey, home sales are down, so that must mean that home values are down and home prices are down. They're not the same thing. All three of those things are different, right? All right. Some potential buyers are sitting on the sidelines until rates or prices or both decrease, while sellers are hoping the market picks back up again so they can get a higher price, right? But don't count on the rates falling to those pandemic lows. Those were the results of extraordinary market manipulation from the Fed. And unless this becomes a regular feature of monetary policy, and we're going to dig in, I want to ask you guys how you feel about that. Rates are not going back to what they used to be. And here's where the whole crystal ball thing comes into play. And here's where studying the markets and studying the economy is really how you can get some leverage on a statement like this, because her opinion is that rates are not going to go back down, and we're going to get into what those rates were. And I agree with some of this, but other things here tend to make me believe that we're going to have to see continued easing from the Fed and not just tightening. And let me get into my line of my line of thinking behind this as well. All right. Stephen, what is Stephen here? Yeah, Stephen Prince moving to Tampa in early 2025. Wish I didn't have to wait. Yeah, yep. Sometimes you just got to bite the bullet, my man. But other times, you're hamstrung and you got to do what you got to do. So, I tell you what, no matter what, when you come, Tampa's awesome. I think you're really going to enjoy it. So I think you will then too. All right. But don't count on the falling rates is what she said. All right. So here's what we're going to get into. Now they get into a little bit of the details of what those rates were. The real estate market has been on a wild ride. Housing prices measured by the Case-Shiller index. And I've shared this index with you guys before. The thing I don't love about it is it's usually a month and a half behind. So it's showing May's data right now, but it's a great resource for the overall market. If you look at the last 50 years, the Case-Shiller index is a wonderful place to go see reality. Okay. So that's where I want to give it to you. But in terms of like the last 30 days, it's always lagging behind. So I won't share that today, but all right. House prices measured by the Case-Shiller index increased 30% between March 2020 and December 21st. Now this is United States wise, a steeper rise than the lead up to the end of the housing bubble in 2008. Now here's where everybody jumps off a bridge right now is housing market is going to crash. This is going to be 2008 again. And we can't wait for houses and prices to crash so we can get a deal. Now I'm going to make a bold statement right now, and I will live and die by it. And I'm okay with it. First of all, this is not 2008. There are so many contributing factors here that were not around when 2008 occurred. Number one being that was a self-inflicted wound from the real estate industry, right? There were terrible lending practices going on. There were terrible, I think that's the number one driver of it. But like money was very easy to borrow. People were able to state income and get mortgages. I mean, you could get your dog a mortgage, and that's kind of a joke, but it's tongue in cheek because there's some reality to that. And in today's market environment, it is still very difficult to get a mortgage. And what I mean by that is if you do not have a clean set of books and you don't look good on paper to a bank, you aren't getting a loan. And those practices have changed dramatically, right? Dramatically. And Andrea said 2008 had too much bad debt. You're spot on. It was terrible debt, right? A bank would loan somebody 102 or 103% of the value of a home without even validating whether this person had the income to pay it back. And that ultimately was part of this demise of the overall, right, the market. We don't have those practices today. So that's the first thing I want you to kind of wrap your mind around. The second thing I want to wrap your mind around is she's going to get into it here. And I don't want to get too deep. I want to finish this article here, right? But like, I'm going to walk you kind of through step by step in the way that I'm thinking here. But let's look at this together, right? In 2008, this was in part because so many people moved during the pandemic, but also because the 30-year mortgage rate was down to 2.65 in the spring of 2021. Now, that's great insight there. 2.65%. Money was very cheap to borrow during the pandemic. It was almost I hate to say it was free, but that's how it felt, right? And people were acting in that way, number one. Number two, they had the ability to move around. So now all of a sudden, this demand for housing, which we've discussed the underbuilding of homes over the last decade anyways, right? Since 2008, we have not been building homes at the level that we need to correct the demand or the supply and demand issues that we actually have, that are the underlying issues that are going on, right? So when you take a tremendous amount of short supply, I'm sorry, when you have a short supply, then you sprinkle on top of it false demand. Well, the demand is real, but what you did is you unleashed it because money was very cheap to borrow. And you gave people the ability to move freely around the country. What you had is this cocktail for an explosion in real estate, right? So that's what's going on. But a 2.65% interest rate, y'all, the average credit card's 17%, right? Like 17%. Now you can borrow money at 2.65 for a home. So yes, values went up. People started borrowing to purchase homes. And then you had the government handing out checks, right? They were sending money to people's mailboxes that some of them needed, but not all of them. A majority of the people who received money actually didn't need it. So what they did is they turned around and started spending money on things like Bitcoin. We've had a whole conversation about this. They started making improvements to their home, which raised the value of that home. That's called forced appreciation, right? And they started taking that money and going, well, you know what? Interest rates dipped a ton. My housing prices are starting to go up because people are starting to move. Why don't we move too? And you've got this whole cycle just took off, right? Boom, 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 boom. Yeah, Andrea, The Big Short. Oh, this is like, for those who've not watched this movie, another encouragement from Juan here, watch The Big Short. It is a great movie. There are lessons that you can take from that will absolutely help change how you navigate the economics environment that you're living in right now. So I love that. It's a great recommendation, Andrea. Thank you. All right, so here we go. The impact of the Fed's interference may be felt for years. So this is where she gets into this, like, why did she say it's going to be felt for years? And this is the thing that I want to know. Like, great, we can all see that whether we're calling this manipulation or false demand or whatever we want to call this, it happened. The reality is it's there, right? But what's going to be the byproduct? What is this thing going to look like for the next 2, 3, 5, 10 years? That's what I want to know, because now it helps me direct my money, right? It helps me better understand how to approach buying and selling, whether that's for my personal, right? Because I don't speculate with my personal real estate purchases. I do speculate with my investments, but I need to be mindful of what that looks like and what are my strategies. All right. So in the spring of 2020, the Fed was desperate to avoid economic collapse. So was everyone else, right? So it reverted to its 2008 playbook. It's pretty strong language here. It cut rates to zero and brought back quantitative easing, buying long-dated government bonds and mortgage-backed securities. Now, Andrea brought up The Big Short. There is a whole lesson about mortgage-backed securities in there and how they were cut up and sold and why this thing went sideways. And that's why I think that movie is awesome, and it's a great resource for you to go check out, because I think it does a great job of taking someone who may not be in economics or these big fancy words that these guys use, like mortgage-backed securities, and helping us understand as a layperson, what does that actually mean? It's a great movie too. It's entertaining to boot, right? Steve Carell's in that movie. It's awesome. All right. So it effectively became the only ultimate buyer of these securities, meaning that the government was the one who was purchasing these mortgage-backed securities. They're the ones buying these loans, okay, to keep money moving. That's what the government was doing here, okay? Or I'm sorry, the Federal Reserve. That's their dirty secret. The Federal Reserve is not federal, nor does it have reserves. So wrap your mind around that one, y'all. All right, so there we go. Mortgage-backed, its holdings. Don't let me lose my place here. Its holdings of agency mortgage-backed securities increased to 1.3 trillion between 2020 and 2022. While the market for agency mortgage-backed securities grew by 1.5 trillion, the Federal Reserve now holds more than 40%. It holds 40% of the total outstanding mortgage-backed securities in nearly half of the market. Holy cow. So the Federal Reserve owns almost all of the, well, half of the mortgages in the marketplace. That is fascinating. Okay. All right. So these actions were one big reason why rates fell so low. Your mortgage rate is based on the 10-year bond rate. Now, here's the thing where people really kind of mix this up and get confused a little bit, right? Is they see that the Federal Reserve came out and said that they're raising the basis points that the overnight rate that the banks loan each other money to by 75 basis points. And we hear that and we're like, okay, mortgage interest rates are going to jump. Well, yes and no. Okay. Mortgage interest rates are based on a 10-year bond, right? They're not necessarily, based on the overnight rate, but they do affect each other. And this is where that other distortion occurs in the marketplace, right? And this is a whole nother lesson that I don't have time, nor am I equipped to fully break this down. An economist would have to walk you through the details of it. But the 10-year bond is the thing that really is where you want to put your eyes if you want to know what's going on with mortgage rates. Are they going up? Are they going down? You're looking towards the 10-year bond. All right. So I wanted to kind of give you that insights. All right. And you can see the chart they've got down below. And here was 20. And look at this number here. This was March 20th of 2020. Look at the spike of those bonds. This is where the Federal Reserve had to jump in and start buying these mortgage-backed securities back. And you can see up until then, it was pretty steady. It was climbing up in 2019, climbing up a little bit in 2017, 0.8. And then, it flattened out a little bit. And then boom, we've got this huge jump all the way up to 1.4, I think is where it hit. Yeah, 1.4. And then the Federal Reserve starts buying back these mortgage-backed securities. And you can see these dips, these ebbs and flows where the rates really start to plummet. And then you got down in the spring of 2021, which were they shut everything down, y'all. Okay. Everything got shut down here. And then bam, we're down into virtually 0% interest rate, right? So it's fascinating to watch. And now you can see it start to spike. Here's 2022, right? There's November 2021. Now we're into 2022, and this thing's starting to climb up again, right? Now it's coming back to levels of 2019, 2020, which is where we were. And I always point back and I tell people that 2018, 2019 was actually one of my favorite real estate markets to sell in. I'm blessed enough. This is my 10th year in real estate. But I think that was one of in terms of overall markets while I've been selling, because the first home I sold was a foreclosure in Westland in 2012 that was $32,000 or $36,000. Can't remember off the top of my head. That the owner of it literally turned the key. I call it a turnkey foreclosure, and turned the lights on, and the house is ready to go. That's how bad it was. That was the bottom, right? And then we started to come back up. 2015, you started to see this push for appreciation really well. And then like that 2018, 2019, I just think it was a very fair market. Price appreciation was very stable. If you were a home buyer, you could negotiate a fair price and a quality product with your money. And then if you're a home seller, you couldn't get away with everything, right? Like it wasn't a free for all where you can unload your property no matter what condition it was. And you were getting fair returns on your property. A 3 to 5% return on investment on a single family home, condo, or townhouse that's a fair expectation of that asset class, right? And then 2021 hit, and it was like if a home had a pulse, it was selling for over asking in cash. It was insane. And you guys just lived through that. So you know where it's at. You witnessed that firsthand. And I wanted to share these things with you because it's so important to understand where you were and where we currently are and where things are going. And that's why I want to share this stuff. All right. So the spread spiked at the start of the pandemic, but then as the Fed kept buying it, it fell to nearly zero, and the housing market raged. That's how she put it. The spread started raising again in June once the end of QE, quantitative easing, was in sight. And it rose further as the Fed started to taper its purchases. Taper means buying. It's no longer buying those mortgage backed securities. It started to buy less of them. That's what the tapering means. Okay. And in the fall of 2021, before stopping in the early 2022, the spread is now higher than it ever was before the pandemic. And they're talking about the how many mortgage backed securities they own. Okay. Buying mortgage-backed securities may have made sense in the spring of 2020, but why did the Fed not start tapering for 18 months? Now, here's where we get in this whole hindsight thing, right? Like, it's always easy to look back and point out mistakes, but when you're living in it, it's difficult. And trust me, I am not uh, giving the Federal Reserve or the government a green light, a pass on this. I just want to share perspective, right? Like, we were all living in that together. This was not the easiest thing to navigate. No one had ever experienced this thing before, right? I do agree. Things could have changed, but we have to look at this thing with some kind of objectivity. All right. So as the housing market was clearly overheating, was never explained. Whether quantitative easing actually helps the economy remains a divisive topic among economists, means that the people who quote unquote have the big brains about money still can't agree that this is a good thing to do or not a good thing to do. Right. The federal economists insist it does help, while academic economists are more skeptical. But there is evidence that when the Fed buys mortgage-backed securities, meaning it buys these mortgages, it brings down mortgage-backed security spreads and the mortgage rate, meaning that it drives the mortgage rate down. Okay. Even though the Fed has ended quantitative easing, its role in fueling the screwy housing market may last for the next decade. Now, here's why I wanted to bring this to you guys. Like, this person, now this is an opinion based, and she's giving her thoughts behind this, but like, she's saying that it's going to jack up the housing market for the next decade. It could. Now, here's the thing about that. Like, that's a pretty big statement, and you have no idea what is going to happen during this next decade with the economy overall, right? Are we going to have another significant war? There is already a war going on. You've got turbulence in China and the United States. Like, so many things could come in here and affect this. And this goes back to that earlier thought of like, is the Fed actually done with quantitative easing, or is this going to have to become part of the monetary policy, which I think it might. And I'll get into that in a different time, but I think it might. Let's keep going here. Okay. Let me see here. Even though the Fed has ended QE, where we leave off, the Fed would like to shrink the size of its mortgage-backed portfolio. So far, it plans to do so by not reinvesting all the securities as mortgages are paid off. Okay. But higher rates mean fewer people will refinance or move. So the mortgage portfolio won't shrink as fast as the Federal Reserve anticipates, right? Because more people are going to want to buy that. There are some whispers about the Fed selling some of its mortgage-backed securities. If that's the case, Charles Schwab expects the mortgage-backed security spread will grow even larger, meaning that they're going to have to buy more. And odds are so will your mortgage rates, right? That is interesting. There will also be a hangover, which I read that article about the housing market isn't crashing. It's on a hangover. I read that article a couple of weeks ago, but this is exactly where it ties back into. It says there will also be a hangover from very low rates in the 2020 and 2021. Like many people, I bought a home in the spring of 2021. Now, between rising rates and slower housing market, I'm not sure I can afford to move, right? You get this lateral exchange where you can sell your home for more money than you bought it. But now because mortgages are double, the payments, right? Your mortgage payment will be twice what it is now. You have to make a lateral move just to make a move, right? Because you're going to have to decrease the amount of home you can purchase to keep the same mortgage payment, right? And that's what she's saying here. So the mortgage-backed market may be less liquid too. Their buyers normally assume that a large number of mortgages won't last 30 years because people move or refinance. But given that so many people got artificially cheap mortgages before rates went up, means that their behavior and their duration of mortgage-backed securities will be much less predictable. And I agree with that. It will be riskier. It will be a riskier asset that commands a larger spread, meaning that in order for somebody to take on that risk, they're going to have to charge us to do it. Right? Does that make sense, y'all? Guys, I've never done this before where I read an article live to you guys, and forgive me. I hope you're getting value. I see that people have been hanging out with me here, and I think this is so important to go through and again share why I'm studying this and why I think it's important to you. And please let me know that you're with me here. Like, hit it up in the comments. Let me know. All right. The Fed has come under lots of criticism lately for being too late to raise rates in response to inflation. But another policy error could be that it kept buying so many mortgage-backed securities later in 2020 and most of 2021. The housing market was on fire and the rates kept dropping. Now we're getting into this thing of judgment. Like, is the Fed not being aggressive enough? Are they being too aggressive? And we just had the president of the United States stand in front of the podium this week and say that inflation was at zero. And y'all, this is not to be political, but listen, I spend my money every month on the same things, right? I have a mortgage, I buy groceries, I have automobile payments, right? I live my life outside of this. And even down to my real estate board dues, those have also gone up. So while the government can sit here and tell us things like inflation is not on the rise and it's at 0%, I assure you that my grocery bill has not gone down. Right? I assure you that housing prices have not decreased. I assure you that rental rates have not decreased. Have you all looked at trying to get a rental where you live? It's insane. Okay. And housing all of those, these are the things we actually spend money on, right? Have gone up. Yes. Gas prices have gone down. There's no doubt about that. And that's where they're trying to like play this in between land. But this is policies and politics. So like it's a whole nother case, right? But that's what's happening in the marketplace. Okay. A 2.6% fixed rate on a 30-year risky asset never made much sense to begin with. And she's right. It doesn't make, from the long term, from an investor's perspective. I don't want my money that I loan somebody out for 30 years at the lowest possible rates. Would you? No investor wants to do that. We can get mad at the banks or not. The reason it got there is because the Federal Reserve was buying these mortgages. A bank could go and do this, and then they would loan this money to us, and then they would turn around and sell this money, this loan, back to the Federal Reserve to get their cash back out, so then they could turn around and go invest in somewhere else. Well, now those banks are not wanting to invest in the mortgages now, and that's why you're seeing rates increase, right? All right, so the Fed created a major distortion in the market where many Americans have lost their wealth, or I'm sorry, where they have most of their wealth, right? And the impact may be felt for decades, right? So now this is the article, and I know that I just threw a lot on you guys' plate. I understand that, so forgive me. But I think it's important for us to try to like, okay, well, what does all this mean? And this is an opinion piece, right? This is someone writing an article based upon what they've watched over the last 2.5 years. 2 years, and what their belief is regarding that. Now, she didn't get too scathing on one side or the other, and I think it's fair. But the thing when I'm talking to prospective clients about what how to wrap their mind around real estate specifically. And I'm going to stay in my lane because that's where it is. I have my opinions about the economy and all types of things, but I want to stay in my lane regarding real estate. The thing I always ask them first is this: do you believe the goods and services that you buy today? And I ask this question of you guys, so I'd love to see your comment in the chat, please, right? Do you believe that the goods and services that you buy today will be less expensive or more expensive in the next 3 to 5 years? I'm going to ask that again. Do you believe that the goods and services that you buy today will be more expensive or less expensive in the next 3, 5, 10, 15 years? I think we all know the answer to this, right? Will some things be cheaper? Sure, right? But will a majority of what we buy be less expensive or more expensive? I think we all know that they're going to be more expensive. And if that's the case, what do you think is going to happen with real estate? And I've showed the Case-Shiller index since the Great Recession, all the way back from when they started tracking the data. And during these downturns, these economic downturns, only 2 of them, right, over the 10 or 11 recessions we had, and forgive me, I'm paraphrasing because I don't have the chart up in front of me right now. I'll share it again on next week, right? Only 2 of those times did real estate prices even fall. And one of those was 2008, which was caused by real estate. We deserve that, right? I wasn't in the industry then, but if I would have been, we would have deserved that, right? You can't have terrible business practices and expect to win in life. You can't. You're going to be found out. And that's what happened there, right? But when you look at your overall, and this is where I want you guys to wrap your mind around and distinguish your primary residence, the thing that you're going to live in. That should never be a speculative play, ever. You should not be speculating with that asset, right? If you can live in a home and essentially live there rent free because of the appreciation, the value that you gain over time. And when you go to sell that house, you get that money back. You should consider that a humongous win. Because the one thing that people do not take into account, most often they don't take into account, is the cost of maintaining a property, right? If your home appreciates $30,000 over 5 years, you have to put a roof on it. You have to keep the energy going, all the things that have to be done to keep a home in good working condition, right? You didn't make money when you sold that house after the interest, mortgage, and all the other things you put in money into. What you did, hopefully, is made a little bit of cash, right? But you don't make these big numbers. It's like what everybody says, like I make $100,000 a year. That's what you tell your friends. But when you go home, you tell your wife you made 73 because the government kept the other, 27,000 in taxes, right? Like it's the old adage there. It's the same thing with your personal residence, y'all. So what I realize is I'm sharing something that most people don't believe. People hear that their home is an asset. And while it is, you have to understand what type of asset it is, right? It is not a cash flowing asset, right? Now, my investors out there, this is where you get to have all different types of philosophies about how you engage the real estate market. Are you a cash flow investor? Are you looking for cash on cash returns? Are you looking for a place to put your money so it's not taxed at the same rate that the capital gains is? I have people who buy homes that look bad on paper, but because they've invested in that through a trust or whatever asset, they're not paying the tax that would have been due on the income they earned. Right. Right. Depends on, and people look at that like, why would anybody ever overpay? But to them, they weren't overpaying. They just weren't paying tax. And this isn't fraud. This is legal. It's open. And guess what? Our government gives us the ability to do these types of things. And I'm not saying it's right or wrong. I'm just sharing. There are so many different approaches to investing in real estate. You got to kind of understand which one you're trying to accomplish and what you're going to do with that. Right. All right. Let's see what we got. We got another comment here. It depends on if we get supply chain glut for goods. I'm not quite sure what you meant by glut, but yes, I'm obviously, like I said, I think some things will definitely go down in price because there will be easing in terms of supply chain management. I'm on your side with that, Andrea, but I do think other things will continue to increase because of their perceived value. So that's kind of how we got to look at that, right? All right. Now what I want to do is before we wrap this thing up here today, I usually spend an hour with you guys, but I want to get into the actual numbers, what's happening nationally. And then I want to show you what's happening a little bit in Tampa. Okay. Because again, tremendous value. You hear all of these things, but how do you that's great. Okay. Well, here's this person's opinion. Here's the theory behind what's going on, but an application, what does that currently look like in our marketplace? So that's what I wanted to share with you now. I'll share some of my trusted resources here. And I've told you guys this before. If you're not, I think the one thing that Redfin does really well is they've got a really good economist on staff, and they aggregate data incredibly. And this is a great place to go and look at real-time data, like what's happening in the marketplace, right? So this is the United States house market as in a snapshot through Redfin. And you can jump up in here and type in your own city, and it'll give you what's going on live, because great, what's happening nationally does affect you at some level, but there are places that are unaffected, number one, by what's happening right now. And there are other places that are growing because of the distortion of what's happening right now. And that's what I hope to help you guys really kind of sift through here, is because you have to look, when it comes to real estate, you have to look locally. That's why companies like Big Z and Redfin and Opendoor will never, and I'm not even going to get into the whole thing about Opendoor being sued for its business practices. That I have a whole tangent on that. But you need to look what's happening in your world locally, what is going on where you are. Okay. Because that's going to give you the most insight and help you be able to make the best possible decision that you can possibly make with where you are or where you're going, right? If you're going to make a move to an area, you need to be looking at what's going on in their local economy. Number one, what's their unemployment rate? What are their jobs rates? Who's doing the hiring? Is it manufacturing where it's going out, or is it tech jobs that are going up? Like Tampa has become the unofficial tech hub of Florida. I love it. We are attracting so many jobs. And I can back that up with the commercial investments that are being made here, right? So like when people are like, oh, I see housing prices going down. No, you don't. You see price decreases from sellers who are still living off of 4 months ago when they come to the market now. But what you don't see is the tremendous amount of investment that's going into our local economy here, because people are long because of the jobs that are coming here, and because of the fact that I want you to take a step back and walk with me just for Tampa as a snapshot for a second, because think of it this way. The median home price in America right now is $450,000, right? The median home does not have access to the Gulf of Mexico. In Tampa, you can buy a home for the median home price in the United States and be on the Gulf of Mexico. This place is still a value. It is still a value, especially look at from a coastal perspective. So that's why I wanted to share that with you. But let's talk about the United States housing market first, then we'll get into Tampa specifically. But all right, what's going on right now? Home prices nationwide, we're up 11% year over year, okay, meaning June to June. At the same time, the number of those homes sold fell 15.8%. So there were 15.8% more homes selling last year at this time than there are today. That's what that's saying. And the number of those homes for sale rose by 4%, meaning the inventory levels rose by 4%. This is nationally. Okay. So again, type in your city here. This is so valuable, y'all. Okay. All right. So U.S. housing market overview, the median sales price is $427,000. Now, also look, you can use this tool really cool. You can come in here and look at home types. So if you're considering buying a single family home, because that's the most common piece of real estate sold in America, or if you're looking at a townhouse or a condo, you can get very specific around what does that actually look like. So let's go to single family homes. Single family homes in the United States, right? For 427.55. Did it make the adjustment there? No. Let me go down here. Come to your chart, and then you can dial in your number right there, and then it'll tell you. Okay. So I love that as a tool. So it shows you all the way across the board what's happening on this chart. This is a really cool website to use. All right. Number of homes that sold minus 15.8%, like they said right at the top there, right? And I like going back over 5 years because you've got this last two that is like a hot mess. You're trying to figure out what the date is. But here's the interesting part when you really look at this. We had a pandemic, but does this chart look that much different than this chart? The answer is no, right? Even though we had this going on, it still acted very similar. And I think that's important to kind of look at, right? 30-year fixed rate was 5.5%. And now you can see on this chart, right? So here is December of 2021, where now we start taking this. And now this is a pretty steep curve where these interest rates really start to climb, y'all, right? So we're down here, December of 2021, we're just above 3 points, and then it just starts climbing. And now we're back up. I heard 6 points again yesterday. I was quoted by another mortgage professional. So I'm definitely intrigued to see where this is going. Now, when you come down here, it tells you the top 10 metros in the United States with the fastest growing sales price. Now, remember, this is June's data, not July. We won't get July's data till roughly around mid-month, because you have to wait for deals to fund. You have to wait for deeds to be recorded, and not all these government bodies move at the same pace. So that's why this data tends to take a little bit longer to come out. You don't have like day-by-day numbers on this. But here it is. Detroit Metro. Shout out to my Detroit people. 37.1% in terms of sales price increase. So when people are like, the market's shutting down, Metro Detroit led the entire nation with 37.1% increase. So if you're my Detroit people, which I have a ton of them watching this right now, check that out. That's what's going on in your world right now. Myrtle Beach up 34%. St. Petersburg, Florida, which is part of Tampa Bay, right? You got Tampa, Clearwater, St. Pete, which is obviously all connected there, 28.9%. Port St. Lucie, which is on the Atlantic side, 28.6%. Look at all these Florida, right? Riverview is a suburb of Tampa, and Sarasota is an hour south of Tampa. So you can just see like this area, West Central Florida is still cranking down in terms of home price appreciation. U.S. housing supply. Now, here's the thing you want to watch for, because this is an indicator of where the puck's going. This is one of those leading indicators, not a lagging indicator, right? Like if we're getting more inventory and houses are starting to stay on the market longer, right? And you're seeing more price decreases in the listing prices, what does that tell us? Where is pricing headed? That's where you want to know. All right. So the number of homes for sale increased 4%. That's what it said year over year. But what I want to do is take you back. Again, you're hearing these headlines, which is if it bleeds, it leads. But what you need to do is compare it to some sort of a normal market. So take this, and I've got a 3-year chart. Let me go back to a 5-year chart here. This is going to give people a lot of perspective. Here we are today, June of 2022. I want you to go back to what I just considered one of the most normal markets, like a healthy, normalized market, right? Look at, we're still below, almost 1 million homes short of where we were at those levels. So when you're hearing all of these negative sentiment about the real estate market and it's going to crash, like there's no proof of that. Inventories are still down. Yes, home sales are down, but inventories are down, are still not anywhere near a normal level. Remember, 6 to 7 months of inventory technically is a flat market, and we haven't been there in a very long time. Okay, all right. Number of new homes listed. Look at this chart. Look at how consistent we are as a country. It's fascinating, right? The average home was only on the market for 18 days. Now, I think this number is going to double when you see July's data. That's where my gut's telling me. But 30 days on market is not 6 to 7 months on market, which would be a flat market, right? That would be considered a buyer's market. We are still in a seller's market, y'all. We have 2 months of supply. So this is, we were talking about this. Go back. Here's 2019. Now, January is always a slow month, so throw that out. Go to the summer selling season. Here's May of 2018, which I considered one of the my favorite markets to sell in. It was a very fair market to live in. We are still not even close to that level of months of supply. We need another month of supply to equal back to that market, right? So I think this is really good stuff to kind of keep your eye on. Here's demand. Okay, now here's the thing. Homes sold above list price. 55% of the homes listed still have sold above their list price. It's fascinating. Homes with price drops, 17%. That number is going to double in July. Watch it. I can almost guarantee it. So again, where are we going, right? Versus where are we now? This is the thing you want to watch. Here's back to 2019, 2018. This looks similar. That's why I'm watching this. That's why I think these numbers are going to continue to climb pretty quick here. Sale to list price, 102.3%. So they're still selling over asking, y'all. That's what you're seeing here. So you're seeing these price decreases and everybody's losing their mind saying that the market is good. It's crashing. It's coming down. But the data, the facts say that that's not the case. Now it is pointing back down and I want to be mindful of that. So I wanted to share that with you guys. All right. I'm going to jump over to Tampa now. And I think this is fair. No matter where you're watching from, I'm showing you how I look at this data, how I'm doing research, how I wrap my mind around what's going on in the local economy here, right? All right, so Tampa. The Tampa housing market is very competitive. Homes in Tampa receive 5 offers on average, right? And sell in around 8 days. The average sales price in the home of the home in Tampa was $416,000 last month, up 24% year to year. The average sales price per square foot in Tampa is $265 per square foot, up 26.2% the previous year. All right. So looking at these numbers, going back to the 5-year chart, right? Like this is what I want to see. And you've got this steady incline of pricing. We all know what's happened with pricing, but here's the thing that I do want to point out. The number of homes sold. This is where I'm seeing that softening, the leading indicators here, right? Like 28%. We sold 28% less homes in the month of June, right, than we did the previous June. So that demand is starting to wane somewhere, right? Now, is it the institutional buyer or is it the homeowner? This is the thing that I'm intrigued to see that data on, right? Because up until April, still over 25% of of all the homes sold in Tampa were purchased in cash. And over 30% of those were purchased by corporations, which is fascinating. So something to keep our eye on. Now, here's the thing I want you guys to look at. Very competitive as in the month of June. Okay. Now, I want to give you some perspective because I'm not Pollyannic on this. I want you guys to understand the June sales data was put under contract in April or in May. So that is, we're talking about 90 days ago in the marketplace. So we have to keep our eye on what's happening, but it still shows we are a very competitive marketplace to date. Average sales to list price, 101.3%. Homes sold above listing, 52% of the homes sold above listing. The peak was in April. That is when our market shifted. And if you go back and look at my lives, we were talking about it then. I'm like, this is the point of inflection right now that we're starting to see. So we are starting to see that pressure come off of home buyers. And this is, I think Tampa is going to lead the way here. This is not a stat that I think you want to be leading, but what I believe is because, and I live this market, right? I eat it, I breathe it, I know it. our sellers are still living off of April purchase prices, and they believe that their home is worth that. And I'm telling you guys that that is just not the case. If you are watching this and you're considering selling your home in Tampa, if you have not done all of the homework, if you have not done your chores, if you do not have a good roof, good air conditioning, if you haven't had renovations in the last 10 years, you better price that thing right the first time, or you're going to be chasing this number down, and that's not where you want to be, right? And I can give you a whole seminar on pricing, because you're going to cost yourself way more money in the long run. Don't hire an agent that will tell you yes to anything you have to say. Hire people who operate based upon data and understand where the market is going. That is the best chance you have to give top dollar for your asset, the biggest return you're going to get. So I want to share that with you guys. That's my pitch for whoever you hire, not just Juan. So I wanted to share that information with you here. I think it's super valuable. Where was it? I think that was all I had on that one. Yeah. And yeah, I hope that's helpful, y'all. I was going to get into our local data, but it's right here. You know, we'll get into July next week, because we should have the data, you know, come next weekend. I'd love to share that with you. Oh, Andrea had one more comment. Forgive me, Andrea, if you're still with us. I wanted to share that. Goods ultimately increase because the world is running out of places to exploit labor. Plus, it seems to be experiencing deglobalization, which is an increase of prices and goods and the wages that become even more stress on the labor markets, jobs. And yes, this comment is very intriguing. So, just for those of you in the audience, Andrea is a past client of mine, and she's brilliant. She's brilliant. So that's a great statement. And that is, oh man, I should have you on and we could go global, because it does affect everything. There's so many factors, right? And that's why I love sharing this stuff, because we can't know it all. We can't be it all. I don't claim to be a world-class economist. I don't claim to have a crystal ball, but what I do love to do is study the real estate market, look at trends, understand our numbers, help people better make better qualified decisions for themselves, so they can move forward, whether it's buy, sell, or invest in wherever they live. And thank you for giving me the opportunity to share this with you guys. Thanks for sticking this out with me. If you have questions, please leave them in the comments below. Also, if you're considering buying, selling, or investing in real estate in the Tampa Bay area or Metro Detroit, know that me and my team's got your back. If you are looking for a real estate professional anywhere else in the country, I have a tremendous network of real estate professionals that I would be more than happy to introduce you to in your local market. Do not hesitate to reach out. And until next time, you guys go out, have a wonderful day. And for those of you on my Tampa channel, you guys go out and live that Tampa life. We'll see y'all next Saturday, y'all.